I woke up this morning, checked my phone, and nearly dropped my coffee. Hedera just made history, and most people have no clue what just happened. Everyone's focused on Bitcoin, watching charts rise and fall, but while they're staring at candles, HBAR quietly joined the ranks of crypto royalty, third ever spot ETF in existence after Bitcoin and Ethereum. That's not speculation anymore, that's validation. But here's the part no one's saying out loud. What's happening behind this ETF could completely redefine your portfolio if you're paying attention. Because this isn't hype, it's the turning point. If you're interested in this topic, hit the like button, subscribe, and type interested in the comments, and I will give you a heart. Here's the thing most people don't get about moments like this. They don't feel historic when they're happening. They feel confusing, uncertain, even a little boring. But what's happening with HBAR right now? It's one of those quiet shifts that the market only recognizes after the explosion. Let's start with the obvious. October 28th, 2025, a date that'll be remembered as the day HBAR stepped into the big leagues. The Canary HBAR ETF officially went live on NASDAQ, making Hedera only the third crypto in history to achieve that honor, right behind Bitcoin and Ethereum. Out of over 19 million cryptocurrencies tracked on CoinMarketCap, Hedera just leaped into a category shared by only 2 others. That's not just impressive, it's paradigm shifting. For years, people mocked HBAR as the corporate coin, the centralized blockchain. And yet, when Wall Street had to pick which projects were stable enough, transparent enough, and trustworthy enough for regulated ETFs, guess who made the cut? Not Solana, not Cardano, not even XRP, it was Hedera. Now, before we get too hyped, let's understand the timing, because it's not random. This ETF didn't drop in a vacuum. It launched the same week as the FOMC meeting where a potential interest rate cut is expected. Historically, rate cuts inject liquidity into risk markets, crypto included, and ETFs thrive in exactly that environment. When institutions see easier money flow, they look for efficient, low-risk exposure to crypto, and ETFs are their gateway drug. So while retail investors chase meme coins for 20% pumps, the big players, hedge funds, pension managers, and family offices now have a compliant, tradable way to buy into HBAR without touching an exchange. And here's why that matters. Every time someone buys a share of the HBAR ETF, the fund has to buy actual HBAR to back it. That means real on-chain demand, not speculative hype. It's the same mechanism that drove Bitcoin ETFs to hold billions within weeks of approval. But the key difference? Bitcoin's already matured. Ethereum's saturated. Hedera's just getting started. And yes, the price dipped slightly, down around 3–4% right after launch. Classic sell the news reaction. But let's not forget, this is after a 50% run-up since mid-October. The market is simply catching its breath. Every major rally needs a cooling phase before the next leg up. HBAR's current position around $0.19 to $0.20 isn't weakness, it's foundation. That's the same support range that's flipped from resistance earlier this month. In technical terms, that's bullish. In practical terms, it's the market quietly saying, we're not done yet. Zoom out for a second. Just 1 year ago, Hedera was trading around $40.04 with barely any volume. Today, it's clocking over $800 million, 0 cents in 24-hour trades, ranking alongside major Layer 1s. That's not luck, that's infrastructure finally being recognized. But here's the twist. The ETF isn't the endgame. It's the invitation. It's the market's way of saying Hedera's ready for prime time. What comes next is what will separate speculators from early adopters. Because when institutions start allocating, it's not because of memes or hype, it's because of math, stability, and governance. 3 things Hedera has mastered while everyone else was busy chasing trends. And that's the part most retail traders won't see coming. They'll look at the charts and think, it's just another altcoin. But those who understand how institutional money moves know this is the accumulation phase, the part of the story where the smart money gets in quietly before the rest of the world wakes up. So if you're holding HBAR right now, understand this. You're not late, you're early, but not for long. Here's the truth that no one on X or Reddit is talking about. The Hedera ETF isn't just a bullish announcement, it's a signal flare. It's Wall Street's quiet way of saying, we're ready to move in. Because here's how this works. When an ETF like Canary HBAR ticker HBR launches, it doesn't just attract crypto enthusiasts. It triggers institutional algorithms, portfolio managers, and custodians to start allocating test positions. They're not here for memes or price spikes. They're here because HBAR now meets the compliance threshold to be legally held in regulated portfolios. That's an invisible switch that just flipped in Hedera's favor. And what makes this moment even wilder is how silent it's been. No massive influencer campaigns, no celebrity endorsements, just a quiet listing on the NASDAQ confirmed by the Hedera Foundation itself. Out of millions of coins, HBAR made the cut, and yet retail is sleeping on it. Now let's connect this to something deeper. Whenever institutional capital enters a market, it does so in phases. The first phase is called exploratory liquidity. That's what we're seeing now. Small capital inflows, roughly $2 million 0 cents in the first 24 hours, according to CoinGlass, coming through spot purchases, not future speculation. That's crucial. Spot volume means ownership, not leverage. It means these investors aren't here to flip, they're here to hold. Compare that to projects like Solana or Cardano, where futures markets dominate. When 70% of a token's volume is leveraged, the price becomes a puppet of traders' emotions. One bad liquidation cascade and everything collapses. But Hedera's ETF-driven volume is spot-heavy, slow, organic, long-term. It's the kind of buying that sticks. And if you're wondering why this matters now, look at the timing. The FOMC meeting and an expected rate cut are setting the stage for a liquidity wave. Historically, every time the Federal Reserve lowers rates, risk assets skyrocket. Stocks, crypto, even commodities. But here's the kicker. While everyone's waiting for Bitcoin to react, the altcoins with real-world integration and institutional access, like HBAR, will lead the next leg of the bull cycle. The psychological layer here is fascinating too. Retail investors think they missed the move when HBAR went from 14 cents to 19, but institutions see that as a discount, a setup before the flood, because what they care about isn't price, it's credibility, liquidity, and narrative. And HBAR just scored all three. Let's not forget who's backing this ecosystem: Boeing, IBM, LG, Google. Literal titans of industry sitting on Hedera's governing council. Do you think they're just experimenting with the distributed ledgers? No, they're positioning for tokenized assets, supply chain systems, and data settlements that'll run on Hedera's consensus layer. The ETF is simply the public-facing piece. The real story is unfolding behind the scenes. Institutional-grade DeFi. The same way Bitcoin's ETF opened the floodgates for traditional finance, Hedera's ETF will do the same for enterprise finance. When corporations start tokenizing invoices, carbon credits, and data rights, all roads lead to Hedera. And remember what the Hedera Foundation said? Today marks history as HBAR becomes the third ever crypto ETF after Bitcoin and Ethereum. That's not marketing, that's a milestone. And it comes during a time when even Solana and Litecoin are just now catching up with ETF approvals. So when people say it's just a 3% move, they're missing the forest for the trees. Price action is the surface, infrastructure adoption is the undertow. Here's my personal take. This is the last quiet accumulation window for HBAR before the narrative explodes. Because when those 12 other ETFs waiting in line start referencing HBAR, the floodgates open. Next part, we'll go deeper into how this ETF is setting up a DeFi domino effect that could make 2026 the year Hedera becomes unstoppable. This is where it gets exciting and a little bit dangerous, because what's about to unfold next for Hedera isn't just about price or prestige. It's about power, the kind of power that rewrites how value moves across the digital world. See, the ETF launch was just the first domino. It legitimized HBAR in the eyes of regulators and institutions. But what happens after that? The answer lies in 3 words: institutional grade DeFi. You've probably heard that phrase thrown around a dozen times, but this time it actually means something. Here's why. Traditional DeFi, the kind you see on Solana or Ethereum, runs on wild speculation. It's fast, chaotic, and often unstable. Hedera, on the other hand, was engineered for predictability, governance, and auditability. Those aren't sexy words until you realize they're exactly what traditional finance requires before moving serious capital on-chain. And now that there's a spot ETF, every compliance department that once said we can't touch this suddenly has permission to explore on-chain yield. Think of platforms like SaucerSwap and Bonzo Finance, which have quietly built ecosystems inside Hedera's universe. Bonzo already allows users to borrow stablecoins like USDC against their HBAR safely, transparently, and without the leverage chaos you see elsewhere. That's DeFi for grown-ups. And once ETF-backed institutions start connecting to these liquidity pools, we'll see real capital, not casino money, flowing through the network. Here's where the power of suggestion comes in. Every major financial event in history starts with whispers, not headlines. The Bitcoin ETF started with just a test fund. The Ethereum ETF started as a pilot program. And now HBAR's ETF is being framed as a small launch. But every whisper builds expectation, and expectation builds momentum. The Hedera Foundation knows this. That's why they're not overhyping it. They're letting the ecosystem breathe, allowing curiosity to ferment before the next reveal. And that reveal will likely be tokenized assets, securities, carbon credits, and even government data moving on Hedera rails. Here's the domino sequence most won't notice until it's too late. 1. ETF approval attracts compliant liquidity. 2. Liquidity seeks safe yield, finds institutional DeFi. 3. Institutional DeFi needs infrastructure. Hedera provides it. 4. Traditional assets begin tokenizing on Hedera. 5. The entire perception of HBAR shifts from altcoin to digital backbone. And that's the transformation already in motion. We're watching a network that's quietly aligning with the future of regulated blockchain finance, the kind the world's largest companies will use when the speculation era dies out. Because eventually, governments, corporations, and consumers will all demand accountable decentralization, and Hedera's consensus model was designed for that moment decades in advance. But don't let the quiet fool you. This calm, it's the kind that happens right before an avalanche. Remember how everyone ignored Bitcoin ETFs for weeks until they became multi-billion-dollar giants? The same cycle is setting up again, only this time it's happening faster, quieter, and more strategically. So the question isn't will HBAR go up anymore, it's how high will the institutional ceiling rise before retail wakes up? And that's the part that keeps me watching every single candle, every on-chain update, every volume spike, because this doesn't feel like a pump. It feels like a recalibration. The market finally adjusting to Hedera's true value. So to every HBAR holder watching this, stay alert, not greedy. The next few months aren't just about price targets, they're about positioning. Because when the dominoes fall, those who saw the pattern early won't just profit. They'll be part of the next digital financial revolution. And that, my friends, is where this story really begins.